Hello, welcome to IGTV. I'm Angeline Ong and this is Trading the Markets. Today we have a very special guest, Thira Nagapan from Master the Markets, and he joins me to talk about the smart money indicator. Thira, before we get to that, just give us a quick snapshot of what you do and what the smart money indicator is.
So Angeline, I'm actually the founder of Master the Markets. We've been going on for more than 14 years now. It's been a long time. And how did it all start actually? My background actually is in cardiovascular pharmacology. So I was a researcher and a scientist. And the turn of events, so I was born in Singapore. I came to UK to do my degree in Glasgow. So whenever people tell me about the weather not being nice in London, I tell them, come on, guys, for reference point, in Glasgow, you only see the sun about 10 times in a year. So what are you complaining about? So that's when I studied my degree in pharmacology. And then I came to London to do my PhD. And that's where then the turn of events in cardiovascular pharmacology happened. And then I got into finance. I worked on a trading floor. I came out of that. Then we set up Master the Markets. And we've been going on ever since. So a lot of the research part of the things that I learned from cardiovascular stuff during my PhD days and my degree days, I've applied it on the markets. So that's how we actually approach the markets from a statistical probabilistic point of view.
So tell us about the smart money indicator. How does it work?
So the smart money indicator, interesting enough, it was developed back in the 1960s. And by chance, I actually met my mentor's mentor in one of Ascot's party where one of the brokers invited us. And then I met him by chance, but there's nothing by chance and there's a reason for everything. And then he was the only one who could answer my questions in not a wishy-washy way, but in a very quantified way. And that's what the smart money indicator is about. So one of the biggest challenges, Angeline, that most traders will have, regardless what they're trading, is that should I let the trade continue or should I exit? And the worst part is, let's say if they're going long, they're buying a position, and you're really nice into good profit of $2,000 or $10,000.
It's hard to stop.
Exactly, right? And then you're thinking, oh, is it going to go further? And then suddenly that red bar happens, right? And then the panic starts to happen. Let's say you're up $5,000, right? The red bar happens and it starts to sell in your long position. Your $5,000 starts to reduce to $3,000. And of course, the usual thing what will happen to humans is that $3,000 going to become $2,000, $1,000? Or is it going to go to negative? Should I just take my money and run? So this is the usual thing what happens. Now, what the quant traders did, and this is what I talked about in the Society of Technical Analysis as well, I was invited there, is that they started to analyze, okay, $5,000 was there on the table, is what they call open profit, right? Unrealized profit, but it's open profit. Now, after that $5,000, then it came down to $3,000. Then is it going to bounce back up to take out the $5,000 and go to $7,000? So they analyzed all of this just to find out, on a probabilistic point of view, what percentage of the time do you get $5,000 open profit, $8,000 open profit, $10,000 open profit. So this is what the smart money indicator does. So it finds out for you on a probability basis what the open profit is, so that then you can design different strategies based on that.
So let's take a stock that our clients really like trading. Tesla is a very popular one on the IG platform. How would you use that smart money indicator on this stock?
Okay, let me just show that. Let's go to the screens. So I will start from maybe the higher time frame and go down. So let me just take the viewers.
And is this daily?
This is on the weekly chart. I'm starting off. Then we'll drill down to even 240. 1 hour, 15 minutes, it doesn't matter. But we'll start off with the weekly. So on the Tesla, at the moment, what we got is we got the smart money indicator. You can see all the orange arrows and the blue arrows here. So the orange arrows is what we call the top, which has been quantified. So the top gets confirmed when we get the dot, the confirmation bar. So this confirmation bar, the one with the dot, right, is where the formulas get fulfilled for what a top is, which was quantified by the quant traders back in the 1960s, along with the Wyckoff methodology. Then the blue arrow here is the bottom, is when the bottom gets confirmed, right? And the bottom got confirmed by this bar over here. So this is all it does, the smart money indicator. It quantifies what a top and a bottom is. Now,
So it takes out the guesswork.
exactly, spot on, right? So then what we got here, and you know what, funny enough, Angeline, I was asking this question for about 3 years in a row in my beginning days of my trading. Has anyone quantified what a top and bottom is? Because a lot of tools like Fibonacci and stochastic and RSI, they all are based on a top and bottom framework. So now we got some kind of framework, right? It's not the holy grail, but we got a framework.
Yes.
Okay. So that's what this does. So it gives you a framework. Now, here's the important thing. From the framework, you can get 3 stats, which is totally systematic and statistical. The first stats is what we call, which is what I said, open profit, but they call it open equity, which is an institutional term. The second stats, what you can have, open equity is good for setting targets. The second thing, what you can also derive from here is what we call the MAE, the maximum adverse excursion, which is all programmed into here, which I'll go through in a minute. And what that MAE does is how much does it go against you before going to your target? As you and I know, let's say you're taking a down move over here, not everything goes in a straight line, right? So this is a typical one, which I want to show people here right now. So you're taking a short move here, let's say on Tesla, right? And this is what scares the hell out of people, is it not? That potential bounce. Now, this is what we call the potential bottom because it's very logical. It's the lowest point of this entire move. That's a potential bottom. It's not confirmed yet. If it confirms, then a blue dot will happen. So the biggest question is this going to continue in its downward move and take out that potential bottom and carry on further down is the question, and increase our unrealized profit, or is it going to go up further, right, after this stall and all that, not take out the potential bottom keeps on at 174.60 and goes up at some point and confirms this bottom and reverses. So this is what all this entire framework does. Another thing what we can also get, which is very important, which I just, so many times I get a lot of our clients coming in and they say they don't know how to define the trend and define the phase. So as you said, Angeline, this takes out the guesswork over here. And we can easily see, we can convert this into a line diagram here on Tesla on the weekly chart. The first thing any trader needs to do is define his trend and define his phase across any time frame, and you'll see how it all comes together. So here I just converted, I'm just connecting the orange arrows to the blue arrows here, right, over here, and then coming back to down over here. And you can easily see it's making lower highs, right, lower lows and lower highs, right? So that's a downtrend on the weekly. And at the moment, this one here is called a top to bottom move, right? And because it's going down as well, same alignment as the trend, so we call this phase 1. So it's a downtrend, phase 1 on the weekly time frame. And we can repeat the same exercise and you'll start to see the clues on what direction to take in terms of Tesla. So let me go a bit lower down to the daily time frame now. And you can see recently, and this is what we were talking about when Trade Guider and us were doing a presentation, you can see it took out that level here, right, at the top, and then it came down crashing, and that's what we call a price structural failure. And now at this point on the daily, let me just write it all down here, this is also a downtrend because at the moment this low is lower than that, right? So it's a lower low, and currently that is a lower high compared to this high, a reference high. So we still got a downtrend, but however, this is what the caution is, what we got to be careful of. On the daily here, if you can see, the bottom has been confirmed. You see this bottom here? Not on the weekly yet, but on the daily, this is confirmed with the blue dot. And this is now a bottom to top move. Because it's going against the downtrend, we call this phase 2. Right? Now, let's go drill a bit more further down into 4-hour time frame now and see what is coming. And then I will give the overall overview picture of this, what's going on. And the 4-hour. And on the 4-hour, this is what I was talking in another webinar that I did as well, which is interesting enough. You can see it was in a downtrend before, as you can see, right? Even if I were to zoom out here, you see, this is all was in a big sell-off, and that's where everybody gets panicky. And then it did that, right, as a phase two. And now here's the critical thing, what I want everyone to observe, right, which is just not to hop into thinking and hoping that it's going to, you know, turn around. I caught the bottom and let's buy. Now here's the thing. Look at this. Now this is a very important pattern what we look at. Now it came here. It didn't take out the last low. It didn't carry on with its downtrend, but it then went up a little bit more and confirmed on this bar. Now this is what we call, I mean, you can call it different patterns or whatsoever, but it looks something like this, right? So this low is higher low than this low, right? But this high is still a lower high. Now this is what we call traders, in a quantified manner, because we've got the framework, this is what we call the single market compression, right? Now that's the first sign that this bottom has got a higher probability to hold. And right now, if it takes out that high, which it already has done, and then my friend at Trade Guider, Gavin Holmes, he calls this the test, right? So you call this the test, it bounces off, which we have quantified, and then it took out that high. So at the moment, we got an uptrend. It's a top to bottom move. It's a phase two, right?
Is
on
it
the 4 hour.
Still intact if it didn't touch the blue? It didn't touch that.
Exactly, right? So that's showing you that there's more strength, right, on this part here. It's not taking out this blue and not taking out this as well, right? So we are holding on to that bottom. Now, on my right hand side, I've put everything down here. So we got a downtrend phase one of the weekly. So it looks something like this, right? And then it's leveling off a little bit, bottom not confirmed. Then on the
phase two.
On the daily, we got a downtrend phase two where it's showing like that. But on the 4 hour, it is showing this, right? It's leveling off and doing that. Uptrend phase two at the moment. So now here is the question that we always got to do. Once you got your first part here, define trend, define phase, which is what I always tell all the traders to do first. Then now, traders, you got to sit with this information and ask yourself. Now, the question you got to ask yourself is the lower time frame going to lead and then change the trend on all the higher time frames up? So we got an uptrend here, right? Phase two. And is that going to shoot up and turn all of this up and take out the last highs over here and turn them all into an uptrend? Or is the higher time frame going to finally lead and bring this crashing down and taking out that potential bottom low on the weekly? That is what the entire framework and the questioning should be. And now, based on that framework, you can pile anything in. You can pile your oscillators, your Fibonacci, your fundamentals, your news, anything.
So I'm going to put you on the spot then. So when you say the lower time frame or the higher time frame, you have a framework to decide which is the correct one to go with.
Exactly. And we also have...
But how do you decide that?
I'm just going to tell you that. So you see, on the 4 hour, I'm seeing what we call a single market compression, and we know the probabilities for these patterns, right? Especially aligned with the higher time frames. One more clue I will take very quickly, just live over here. On the weekly, I'm getting that. Very quickly, I'll go on to the monthly as well, right? And I'll quickly double check this, and there we go. So I still got a downtrend phase one, and I know that usually I will get only a top or a bottom one per year on a monthly. So on this, at the moment, I've got some move towards the upside on the shorter time frame, but in the longer term, I believe on a probabilistic point of view, it's got more leg to go to the downside, right? But in the time being, that doesn't mean we can't make money on the lower time frame. So how I will play it is, I will take this towards the long side, along with the volume indicators which I got here from the Trade Guider team over here as well, which is supporting, you see, this large volumes coming in over here.
And that ties in with technical analysis where volume is a confirmation.
Absolutely, right? That's what we do a lot of webinars with Trade Guider team, Gavin Holmes and his team over there. And I got a VSA light over here as well, which is also showing that the green is coming in and that bottom is going to probably hold. So how would I play this? For the short term, I will still take it long, right? Knowing that the higher time frames on the daily and weekly are still in downtrend. But then I would use my stats over here on the exit points. Where will I get out on this particular trade? So if my strategy is based on a 3 time frame based, which is a 4-hour entry, a daily trail, and a weekly exit, then my clue to exit will come on the weekly. The first thing I will look for, and I'll stop here and you can ask me the other questions on that. The first thing what I will look at is, I've got the 4-hour bottom confirmed. Will that 4-hour bottom at 174.60 hold itself to become a daily bottom, which we also got? But the real question now is, will it become a weekly bottom according to this framework? Am I going to get that blue dot appearing, and can I capture it? That's my first exit point. Once it confirms that, I can scale out a little bit of my position, and then after that ride it to the next point, which is my 50% point here, I can see here, which is 1.25 ATR according to our framework, which the probability stats. In fact, to be honest, Angeline, I mean, a lot of our clients and everybody who watches this, they always tell us they've not seen any indicator which can give probability statistics. This is the only one. And the quants have developed this since the 1960s, a very powerful framework. And 1.25 ATR, what I mean is that once I get the blue dot on the bar close, I'll calculate my 1.25 ATR over here. Over here on here, each ATR is about 22 points over here on Tesla, $22. So 1.25 ATR will be about quarter of that, what, $27? So once I get the blue dot, I will add $27 to the closing price, and that's my first exit point. That's how I would do it.
And clearly this allows you to not overstay at the party.
Spot on.
And not understay at the party.
Exactly. I like that. I like the analogies. Yeah.
How about something like, for example, Nvidia? Can I ask you about that? Because we are on the cusp of its earnings, and it's such a huge stock. You know, it's lifted the Nasdaq and many other indices along with it. And I know with technicals, it's all in the price. Can we have a look at Nvidia?
Absolutely. Let's go for it. Let me just bring it up over here on Nvidia. I think it's NVDA.
I'll give you a discount to keep that saying, by the way.
Say that again?
I said I'll give you a discount to keep that saying.
All right. There we go. Nvidia.
And you can use this even though there is a huge announcement coming out?
Of course. In fact, if you know how to read price properly, you can see ahead of the news and what the smart money has already thought of to plan your position ahead.
What the quants have already thought of.
Exactly. Or what the professionals have thought about, you know? Smart money, which is what we call them. So over here on Nvidia, what I can really see, and this is the first principle, and I think everybody listening in will all agree over here that no stock, no instrument, no commodity, no futures, nothing can go in a straight line forever. Do you agree, Angeline?
Yeah.
Of course, right? So over here, again, you got the framework. Look at that. That's the bottom over there. Got confirmed on this bar here. Took a bit of a retracement. But here's the main point. As I said, according to this quantification, look how powerful it is. Even though it retraced here, the top didn't get confirmed. So why would it be out of that position? Right? That is how powerful their whole quantification is. The homework is what for the viewers is which one do you want to select and trade, right? And then look at this, right? So it has moved quite far from its bottom right now, and everybody watching in will agree that it can never move in a straight line. The further it moves from its bottom, there's a higher probability it will make a top. Right? So at the moment, even though I can trade this on a lower time frame, short, but I just got to be aware that, like you said, not to overstay at the party. This is at the moment, it's an uptrend phase 2, right? If it confirms the top, so I can trade that short for that to confirm its top on the lower time frames.
So let's take a look at the 4-hour then.
Let's go for it.
Yeah.
Let's now go on to the daily. So we got this is uptrend phase 1 at the moment, looking for a top to form. Let's look on the daily. You see the daily already has confirmed its top. Can it hold this price to become a weekly top is the question. And then we go on to the 4-hour. It's still an uptrend phase 2. This gives you a really good overview of where you are at. This is the best part about this framework, right?
What are the tiny green dots, Theo?
The tiny green dots is what's been designed by the trade guider team, Gavin Holmes and his team. This is to do with the volume. So it tracks the volume. And once it turns into gray, tells you that the volume is diminishing and the trend is diminishing towards the downside. So we can marry this up along with the dots. So the best setups would be, once you've selected which dot to trade, once you get an orange dot with a top, and this VSA light, as they call it, turns into gray, right? That's a good signal, or turns into red is even a bigger, stronger confirmation signal. So at the moment, in terms of the 4 hour, this is still an uptrend phase 2. So we just got to be careful when we trade this, not to be caught out by the weekly turning back into its trend again, but it's still got a bit more leg to go down to the downside to confirm its phase 2 on a higher probabilistic point of view. But remember, we're trading on probability, so risk management is always important.
And for those watching, they always ask me questions when I meet traders who, one of the key questions I get asked very often is, where do I start drawing the line? Where do I start planting my Fibonacci? This would very easily, if you look at the dots, because it indicates the bottom and the top.
You got it.
Where to draw.
mean, you already answered for me, because you see, the most important thing, because we use Fibonacci as well, right? And with this framework, remember it's a framework, you can apply anything on top of it. What does Fibonacci need? It needs 2 points, like you said. It needs a top and a bottom, right? To make it more quantified, more structured, rather than doing guesswork, isn't it? So you see, on the 4 hour here, let me just draw that Fibonacci for the viewers watching in. I've got my bottom already.
But the trick is in selecting the bottom, right?
Yeah, but over here, the bottom is already done for you, because the bottom is the blue arrow with the dot, right? So I choose that bottom and I draw it all the way to the top, right? So now I got my whole Fibonacci level based on trend as well, right? And we did this research as well on live on one of our workshops as well, which is, you see over here, if that's the 100%, at the moment, this is an uptrend phase 2. The question is, how far is it going to go retrace before it bounces and resumes in its trend? Is it not? That's the usual question. So at the moment, it's on its 50% level, right, of fib. But you can get this, but the fib, the difference of this fib is every time you can draw it on a solid structured framework. That's the difference.
And every framework and every analysis is not 100%. It's not foolproof.
Of course not.
So what are the pitfalls or risks of using this?
It's like in any other strategy and any other system. It comes down to probabilities. Because we're trading on probabilities here, if I take a 50% target point, I know that 50% of my trades, I can improve the probabilities by selection better. That's why we use volume a lot and work with Trade Guider quite a lot. You can improve your win rate. Let's say you can even push it to 70% win rate with a 2-to-1 actual reward to risk ratio, using this where to get out of the party, as you say. And then we are fighting against very less losses, and the whole strategy becomes net profitable. And it's got to be combined with risk management as well. So that's the whole realm of strategy construction, which we can go through on another video, which is a large topic.
Right, that was really good. Thank you so much for joining us and showing us the framework. It's fascinating, and I'm sure we'll get you on to talk more about risk probability and the risk reward. Thank you so much for joining us. Thiru Nagapan there from Master of the Markets with us at IGTV.